Okay, let me just pause the video and we'll scoot over there. Now, this is where London traders are going to get a little bit upset. You know, we do have this move here at 139. We come in around 2 o'clock. I say we, but I mean them because I don't trade London. I'd like to, but I'm on the East Coast. Anyways, full target. So what we are looking for is a re-entry trade. Right? What are we looking for? Re-entry. We're looking for an entire recycle of the OSOB. So we're looking to sell, right? So we want to see it come up into the buy zone. We want to see this kind of action right here that you see right here. This is what we want to see. Well, we don't get it, right? We do get a pop out of the sell zone, but that's not what we're looking for. We're going to stick to our rules. Now, later on, as you are more confident in your trading, you know, you could look, but you know what? Maybe you don't need a full recycle. What you need to see is a full recycle or a pullback right to the profit line. You know, that's possible, you know. But for now, want to keep it as objective as possible. Simply because it's just to get traders back on track. And it's also for traders that don't want to spend, you know, babysitting trades. They don't want to spend time, you know, looking for trailers. They want to get their win and get out of the market and let their account compound, right? That's where the magic is. It's when you let your account compound. And when your account gets bigger, right, you're risking the exact same percentage, but what happens is your position size gets better, so you're putting on a bigger position with the exact same risk percentage of your overall account balance, right? That is where the magic is in trading, okay? It is not, the magic is not in seeing how many trades you can take in a day. That is not the magic, all right? The magic is the compounding aspect of trading. Enough of that. All right. And the sad part is, you know, London's not going to get a trade-off today. They're not going to get a trade-off. Yes, the market went from 58.74, you know, a 50-odd pip move, you know, big deal. 4:30 news here, so we stand aside, right? And then when this trade finally triggers in, it's after 5 o'clock. There's no trade in London. None. Now, some people say, well, hey, I'm a day trader. Well, yeah, you're a day trader. But sometimes the best trades that you can be in are the ones that you're not in, right? Anyways, NFP day. Now, if I was trading NFP day, any price action before non-farm payroll, I have no interest in. I would have no interest in. And the reason I would have no interest in, because people are waiting for that number. That's a big number. All right, you might get some fluctuations in price, but are you really going to get, you know, a move like this? Probably not. Now, not to say I will not be in a swing trade coming into NFP day. All right, that's possible as well. So anything before the news, we're not going to worry about. And yes, you do get a trade here that sets up at 57. It gets down to trade management area, right? So you get to lock in something. So if you did take this trade, the low on this candle is 58.40. Your target is 37. You're 3 pips above it. You know, once you start seeing this kind of price action, this is where you can kind of say, okay, well, yeah, I can lock something in here. Okay, you're going to get taken out anyways. But this is the price action I want to take a quick little look at here. Let's just look at this price action here. Price comes down. We get a, well, that's the wrong arrow. We get a, get rid of that. There we go. We get a low right here, right? And then we're going to get a lower high. But then look what's coming up. Look what we have here. If you are in this trade and you got this kind of price action, you may want to think about just getting out of your position. Now, how can you use price to manage this trade if you're in this kind of position? Well, here you go. Let me just put this out here. Let's say, for example, your entry's here. Let's say you get here. Price comes up, puts in a lower high. That's good news for a short. Then we smack in a lower low. If you see this lower low forming and starts moving up again, you can mark it out. Or you could just put your stop just above the swing level that occurred just before you got to this lower low. All right, that's some art in trading. That's just pure price action trading. So NFP comes out. Bad news, 95,000 job losses. Keep in mind, though, from what I understand, there was a lot of census jobs in America the last little while, and those had ran out. Right, so I don't know how that number is. That's more of a temporary position anyhow. Let's take a look. So we're still in this market of non-farm payroll, 8:30, right? Non-farm payroll, you might want to wait, 5, 6, 7, 10 minutes. 5 minutes are cutoff is our minimum, but a little bit longer than that. This trade goes to target. Problem is, it's at 8:32, right? No trade. I just marked off the swing high here. When I go through the charts, I do this. So I saw that swing high put in, because what I'm looking for is I'm looking for a pullback into the sell zone to get back in the buy zone so I can get a re-entry trade off, right? Because that's what we're looking for here. So I click through. This is what happens. Now I'm in the area that I'd like to be in, right? Now I have to pull back into the buy zone and above this level here, 59.33. Now, this setup's going to go to target. All right. Now I don't want to paint, pie in the sky, rose-colored glasses type of trading. This move, it sets up and triggers in a span of, 6 minutes. 6 seconds. I'm going to pass this trade. I'm not going to count this trade. It is a winner, but I got to keep this stuff real. I didn't trade this, so I want to keep it even more real. You know what I'm saying? I want to, the benefit of the doubt that most traders wouldn't have got this. I know I personally, I would not have caught this trade. I would have seen it set up, but, I couldn't have got it in fast enough. So trade goes to full targets. Now what am I looking for? I'm looking to get into a short trade, right? So I want to see a recycle up into the buy zone, back into the sell zone. There's a swing level here, right here that I'm looking at. Boy, let me just... The swing level here I'm looking at, but just below that is this little spike level here that was the end of this little blip here before a strong move up. So I want to adjust around that as well. And I'm looking for re-entry, so I can be a little bit more lenient on how far I'm going to adjust down, right? I want to break this low anyways. So there's a low here I want to break. So we're looking at about 58. Let's get the low of this candle here. 60, so 58. There we go. Now, I'm not even in the market yet. I'm not even in the realm of looking at a short trade, simply because I haven't been able to get a recycle into the buy zone. Now, this is where that we had that nice pullback into the profit line here and into the directional, right? Which we are objectively also saying can be a support or resistance area. So you could be looking, if you're a bit more subjective, at this trade here. But to keep it objective, we're looking for a recycle. Regardless, we'd still be looking to get it short below this area right here. Now, we do have our move up here. Bingo, so we're looking for, right? Now we're red down here. This is good news. So if price can come down to our line right here, no joy, back up. Short trade, long trade sets up at 58.94. Adjusting, not so much. Nowhere to adjust to, really. There you go. And that'd be the trade, basically. And how can you manage this pure price action? Well, simple. Let's say you said, well, I want to be a little bit more in tune with the market. I don't want to just pick a random number to put my stop at. Well, simply what you could do is this. I'm going to use this line here. Anyway, this is a